Look at this massive bull run for Bitcoin. We are now at 20.4K. Who would have expected that within the first 2 weeks of this year, we are going to reach again 20K, that we see this kind of a bull run? We've basically completely wiped out the losses of the FTX collapse. Who would have expected that? What's interesting about this rally is very similar to other rallies that we saw when we came out of a bear market. Because what's particularly interesting around this rally is that it's mainly Bitcoin that's leading the pack. Okay, Bitcoin is outperforming tech stocks. Bitcoin is outperforming altcoins. Bitcoin is also outperforming Ethereum. Bitcoin is moving the most. Now, why is that? Why is typically, when we come out of a bear market, why is Bitcoin leading all of the gains? Because one might intuitively think altcoins actually have more inherent leverage, right? They are riskier. In other words, Bitcoin might just move with a little bit of volatility, a little bit up and down, and the altcoins, they might move way more up and down, right? Because they are smaller, they have more leverage, so to speak. So when things are going up, why aren't the altcoins outperforming in this case? Now, the reason, in my opinion, has to do with the long-term outlook of several assets. When you look at Bitcoin's 1-year hodl wave, so that's a measure of how long has Bitcoin not moved in a wallet. What percentage of people haven't moved their Bitcoin for at least 1 year? When you look at this graph, you see that currently 2/3 of all of Bitcoin have not moved in the last year. So despite this incredible decline in the Bitcoin price, despite this crazy bear market, people are not selling their Bitcoin. People are holding on to it. This is pretty much at an all-time high, meaning the Bitcoin that's currently moving around is relatively illiquid. You don't need a lot of additional cash into the system in order to push up the price, because they're simply so much more or less locked up in these diamond hands. And this is a feature that you don't see that much in altcoins, in Ethereum, or in stocks even, right? When things go down, people tend to panic. People tend to think maybe my altcoin isn't the one that's going to have the next rally and the next bull run, right? Or maybe people think Tesla could potentially not recover again, right? So I don't really buy it. But for Bitcoin, that's different, right? People that believe in Bitcoin, they go through all kinds of down movements because we have seen these things in the past, and Bitcoin was always able to recover. So you see these diamond hands that dry up the supply, that then lead to Bitcoin outperforming the rest in a bear market, and that then also lead to it rallying the quickest once the bear market stops, because the floor has been established and the Bitcoin is simply so illiquid. And we can see this also in relative charts, right? So when you look at the properties of Bitcoin, right? The properties of Bitcoin as in being an inflation hedge and being limited in supply and appreciating, etc. It is kind of like competing to stocks, right? Stocks are also pretty volatile. You also try to somewhat protect your purchasing power with it. It's a savings vehicle. It's similarly liquid. So I think Bitcoin competes more with stocks than it does with fiat, for example. So let's look at Bitcoin relative to tech stocks. Okay, let's look at how it actually did in the past, in the last weeks and in the last days. And we can see there was some kind of a floor here that we mentioned in prior videos. And we see over the long term, of course, it outperforms. It's a bit more risky. Or we can also see this FTX collapse that we have seen here in November of last year. This has pretty much been the bottom for Bitcoin relative to the Nasdaq, right? This is the Bitcoin price divided by the Nasdaq. We have basically turned around, and even though the Nasdaq declined during this time, right? Since, let's say, the 10th of November, okay? The 10th of November, Bitcoin outperformed the Nasdaq, but the Nasdaq itself, it actually did not go up. The Nasdaq itself, since 10th of November, actually went down, okay? So Bitcoin is able to hold on to its current valuation even though tech stocks go down, simply because now the remaining Bitcoin is held by the diamond hands and there's not so many tourists in the space anymore. You can see this with all kinds of different metrics as well, right? YouTube subscriber growth for crypto channels is pretty much at zero right now. The number of transactions for Bitcoin is pretty low. There's not a lot of speculative money that simply just want to quickly flip Bitcoin. The people that currently hold Bitcoin don't want to quickly flip. They simply just want to hold on to it because they think it's a better alternative than holding on to fiat over the long term. And that's not what we're seeing. We simply see that the dollar cost averagers, they created a price floor. The diamond hands, they created a price floor. It's now in strong hands. And whenever things tend to look slightly more bearish, it's the illiquid Bitcoin that can outperform everything. And it will take a while until this actually moves into the altcoins, until the altcoins become attractive again because Bitcoin might be too expensive. But currently, the risk to reward for Bitcoin is pretty neat, right? If you think, okay, I want to get out of the market in case we see similar lows again, you have a downside of maybe 26%. But if we actually do start another bull run from here, because maybe monetary tightening will stop from here, that's another theory. That's why traditional finance is currently going up, right? If you have the bull case now, the upside is obviously quite nice, minus 25% versus plus 200%. Now, why is traditional finance, why are tech stocks currently bottoming? Why aren't they selling off more in this very hostile environment of heightened interest rates? The reason is people look at the cross of inflation rates to interest rates. So historically what happened is monetary tightening stopped and risk on assets tended to rally whenever the interest rate was higher than the inflation rate. And those two rates are coming close pretty quickly now. So when you go to true-flation, which is not the official inflation rate, but it's an inflation rate that's updated more frequently, we see how in the US, at least, it's coming down relatively consistently. And one of the reasons is the declining transport prices because of selling off of oil reserves, okay? But it's currently at 5.5%. And the interest rates are pretty much in a similar level, right? So this is the United States interest rates. And it is currently at 4.5%. So it's only 1 percentage point of a difference. So seeing this kind of a cross would then indicate that monetary tightening could stop, which would then mean that tech stocks and Bitcoin, etc., could rally again. And this is currently what we see. This is why the Nasdaq is currently doing comparatively well. And this is why this tailwind from traditional finance can also support Bitcoin. Now, nobody expected this to go up that parabolic, right? But it is no surprise to me at all that it's mainly Bitcoin that's performing nicely here. When you look at the Bitcoin dominance, it's shooting up right now. And we have seen the exact same thing in the past bull runs, right? So we had our bear market in 2018. And then what first really pushed up was Bitcoin. So in 2019, it was mainly Bitcoin that actually made gains. So you could have bought over here, you could have sold over here, right? Made the whole rally of 2019. And you would have made more money actually doing this in Bitcoin than holding, for example, Cardano or holding any other altcoin, right? So even though we saw this massive bull run, it's Bitcoin that's outperforming. And I do expect something very similar happening in case we really come significantly out of this bear market in this way. So a lot of different indicators show now that we are very, very depressed on the Bitcoin price historically, right? Also, on the other hand, people say that this is a special time because in the past we've never seen this kind of a monetary tightening. Now, the big question is, how long will the monetary tightening last? That's something that nobody has a real answer to. But in the case that it doesn't last very, very long from here, then the risk versus reward for Bitcoin right now is very, very positive. So should you jump now directly on this pump Who knows? People say, when you follow crypto Twitter, people say that this might also be partially triggered by trying to liquidate shorts. So there had been quite a few short positions, and the centralized exchanges, they might want to liquidate those. They might want to push up the Bitcoin price to then liquidate the shorts, get the liquidation fee. And this could mean that this could exactly have accelerated this rally. This would then imply that once the shorts have been liquidated, that the price could collapse again. Very much possible. So short term is always very hard to predict. Medium to long term, I think the current situation, the current setup for Bitcoin does look very positive, even though very few people are going to watch this because, right, this is crypto winter. Nobody has eyeballs on crypto. If you are watching this, which is obviously the case, then you can be rest assured if you buy now, no financial advice, right? But this is how I see it. If you buy now and you hold for at least 3 to 4 years, I think very few things can go wrong. I think the risk to reward at these current prices for Bitcoin is very positive. For Ethereum and for altcoins, it's much harder to say because there are regulatory risks. There's also a lot of competition. Nobody knows what exact altcoin will really rally the next time. Very often from one bull run to the next, the kinds of altcoins that rally, they change. The narrative changes. So nobody can really predict if it's good now to buy your favorite altcoin. But buying Bitcoin should be more or less, at least comparatively speaking, the safest of the bets, right? It's now even outperforming tech stocks and obviously Ethereum as well. So yeah, if you found this useful, feel free to give us a thumbs up. Feel free to subscribe as well, and see you in the next video. Bye-bye.